Good morning, traders. This is Alice Lind with you today, and I'm glad to welcome you for my today's webinar devoted to Fibonacci. And as always, I would like to ask you to put pluses if you can hear me and if my screen is visible for you. Okay, we've got several pluses. Let's wait for some more for everyone to join. So, okay, today I wanted to talk about the discovery of one of ancient Italian mathematicians and on how we can use his discovery in trading. And more particular, I'm talking about the Fibonacci lines, the Fibonacci studies. So how it can help us in understanding of the market and how it can help us to make a prediction about the market. So many traders believe that if it's applied correctly, Fibonacci tool can successfully predict market behavior in more than 70% cases. So for us, the instrument that has such strength always attractive and always interesting. So besides 70%, let's say it predicts the movement in 70% cases, we can we can use other indicators and even increase that percentage and to reach higher success rate. So right now I want to talk about the Fibonacci method in trading on the binary options and how it can be used here to predict the market. Well, basically there are 5 types of trading tools that are based on Fibonacci's discovery. That's arcs, fans, retracements, extensions, and time zones. Exactly today I wanted to talk about the retracement. That's the instrument that I use, and probably you saw me using the retracement, Fibonacci retracement, on one of the previous webinars. I also asked pretty often about what's the instrument I'm using there. Well, basically on the webinars I always telling what I'm using, and besides you can see here and here the name of the indicator that is currently used. So let's pay attention right now to what we've got about the Fibonacci retracement and how we can use it. So we have it on the platform, as I'm using it pretty often. It's placed here, but on the main you can find it here. So as I told you, the Fibonacci here is like different methods, different sorts of Fibonacci, like time zone, fan, and many others that can be used. So right now I'm using retracement as one of the instruments that I'm using. So what's the point and how to use it? First of all, we choose the maximum and minimum of the price within certain period that we are planning to analyze. Here I have Euro USD chart, 1 hour time frame, and well, it's obviously that's here the minimum. Come on. Here is the minimum of the price, and here is the maximum. Upper shadow is here. I don't see it behind my arrow. Okay. Here. So right now you see that there is such nice rainbow chart. Of course, you can change that if you don't like. So basically, what do we have here? Here we see the Fibonacci and Fibonacci retracement lines in percent, and here you see the percentage. Here the common linear regression indicator, and here I have MACD. So what does it tell us? How can it help us? First of all, if you pay attention, you will see that near these lines there is time, there is place where prices consolidate, they rest for a while. So basically it's the same support resistance levels, and many traders believe that they basically tell us the levels of psychological comfort of the traders and of the market, and based on these levels you can predict the further movement, because if you know that from this line the price will stop near it, or it will stay near this line, it's additional instrument for you to apply it and to make analysis and to make prediction, which may lead to your successful trading, to your profit on the market. Basically these levels, I'm using them both on short time frames, on the long time frames, because support resistance level, they help us to predict if there will be if the price will bounce off from the certain line or will keep going its movement up or down. So the same is here. When we see that the price is near the line, it can tell us that there is the time to pay much attention to it, and there is a possible change in the direction of our price. So let's switch to another time frame and see how we can use. Let's see 240 minutes. Here we see like the minimum of the price. Let's draw it. And here we see the maximum of the price. So basically also near these levels the price stocks, and here when it goes closest to this line, there is the point for us to pay attention to for the changes, to pay attention to the further direction, because as in this case it can reflect and move the opposite direction, at least for a while. And for us that's an opportunity to open at least a short term frame, short term trade that will bring the profit. So this is important instrument when it deals to market prediction, when it deals to the support resistance level. Basically, if you draw support resistance level, they in most cases they will be near these lines that Fibonacci retracement gives us. So that's really interesting instrument, and we shouldn't underestimate it, because when it combined with other indicators, the prediction that it gives can be really amazing. So what can be added also? The same here is the same situation as with the level of support resistance. Some people who trade using the fundamental analysis using other indicators, they laugh at those who are using Fibonacci, because this method, this indicator, is quite popular among traders, and so many traders are using them that we can really notice that there is some influence of these lines on the market, even psychological influence on the traders that start to close positions or open positions near these levels. So basically it has influence, because the same as with the support resistance level, they can be only in traders' hat, but so many people are using them, so we can see some patterns, some logic in this movement. Okay. Besides, what I wanted to add, that Fibonacci retracement, it's used in many indicators such as Tyrant levels, Gartley patterns, Elliott weight theory, and many more. I'm sure that those who are using these indicators have seen before this picture, have seen before the general information, have read general information about the Fibonacci. And besides, what else? Let's close this indicator for now. Let's add the moving average. We were talking about it the previous time. The ordinary, moving average with the period of 9 candles. Let's switch it to at least 15. Will be smoothed. Okay, so we spoke about the moving average the previous time, and basically we spoke that it can change. Right now it's on this level. If the next dot will be, let's say, here, it will be higher, and so on. So it's not static. The Fibonacci lines, they are static, and that's really important, and that really helps to predict the movement and to make fast analysis, because basically you can open you can draw this retracement once, and in several hours or in several days you will enter the trading you will enter the chart, and you will see that it's still there, and you will see that the analysis that you made previously may help you to make the further analysis for the current market situation. So it can be a really useful instrument if you know how to use it. So the next time I'm planning to start trading partially using the Fibonacci retracement, and those who will be present on the Thursday's webinar will make sure that we'll see how it works, we'll see how I'm using it in the trading, and I believe that's gonna be a really important tool in their trading as well. Okay, 1 second, I've got a question here. The question is if we can, where we can apply the Fibonacci retracement only on currencies. Well, basically no, of course no. It came to us from the stock analysis, so right now we are using it on the currencies on the same method that we were using it on the stocks. So you can see that right now at the current moment I have here the retracement, the Fibonacci retracement lines, and I drew it like long time ago, but right now what we see that the price has stopped near this line because that's the important support level. So it proves this instrument to be really important, and the trading process really important for those who used to use technical analysis in their work. Besides, these lines can be also important when you are trading on using fundamental approach, because near these lines traders believe that, analytics believe that the price is gonna consolidate and stop for a while. So basically it gives us additional information and additional entrance points. So right now I want to thank you for your attention. I want to invite you for the Thursday's webinar and to trade with me. Okay, so thank you and bye bye.